All right, my brothers, my sisters, fathers and mothers out there. I once promised that I was going to give a free strategy, and this is me fulfilling that promise again. I have a free strategy now that I want to give out. Please pay close attention to it and use it to make a profit. You try it out in demo first. Use a demo account to trade with it. After at least 1 week or 2 weeks, let it be profitable with you first before going live with it. All right. So now this is your main chart. You go to the F button. For those that does not know it, this F button. Click on it. Now the first indicator that we're going to put now is the stochastic oscillator. You look for it. This is the stochastic oscillator. That's the first indicator we're going to put in now. You click on the stochastic oscillator. Normally, it this is the default setting of the stochastic oscillator. This is a default setting. This is also a default setting. Just like the pixel of the default setting will be 4 pixels and 4 pixels, but this one is 2 pixels. The last time I used this stochastic, this is the pixel I used. And then when you're going to do some modification now is in the levels. In the levels, that's what you're going to do some modifications. You click on the levels and now change your levels this way. Set your levels this way in your levels, and then 2 pixels and the color of your choice. The color of your choice, and then you go back to, and then you go back to add more lines. To add more lines, where you can add this number, you have to click this plus to add more lines, more spaces where you can put, where you can add more numbers. Because the first time when you click the stochastic, I think it will be showing you only 80 and only 80 and 20. I think you have to add the rest. So you click this plus sign, add the rest. If there's if the ones you add are much, you can click this bin symbol and then delete the excesses. When you're done, you go backward, go back, and then you click done, done, and then you see our stochastic is in place now. Then the second indicator that we are going to put down is the RSI. The RSI. Here now you have to click this F button in the indicator window 1, not on the main chart. In indicator window 1, not this main chart. Indicator window 1. You click this F button. Now we're looking for RSI, relative strength index. Relative strength index, RSI. You click on it and you set your setting. Normally here it should be 20, I think 27 or thereabouts, or 14. You have to change it to 60. Here it is always 14. Change it to 60. Alright, put your pixels and your color, the color of your choice. When you're done, when you're through, you click done. Done. And then so we added our RSI. RSI is the line in between. Now how this strategy works now is when you see the RSI, when your RSI is above the level 50. When your RSI is above the level 50, you only be looking out for a buy, a buy setup, a buy setup. When your RSI is below level 50, when your RSI is below level 50, when RSI is below level 50, you'll be looking for a sell setup. Now it's going to be this way now, and when you're looking for your setups, either your buy or your sell setup, you use the stochastic to enter the trade, to take your position with the stochastic. It's with the stochastic you enter a trade and then you also exit the trade. This is a simple free strategy that you can use to make money out of currency, out of volatility, out of gold, out of boom and crash, out of indices, out of all those jump index and all that. It's a very simple strategy that used to make a lot of money out of the forex market. So now this is how it works. This is how it works. This is how it works, and you see, like, let's start here. You can start anywhere actually. Let's start here. You see the stochastic now. This is the stochastic. This is the RSI. Now the RSI is above. Is above. That means we're looking for a buy setup. When the RSI is above the level 50, you're looking for a buy setup. And how you enter your trade is that when the stochastic, first the RSI line is above level 50, means you're looking for a buy setup. When your stochastic has formed a crossover line, when the red line of the stochastic has crossed over the blue line of the stochastic, when there's a crossover, then that's where you enter your trade. Like here, like this. When once there is a crossover, you see a crossover here, and this way, when once there is that crossover, you place your trade, and then you can always close your trade when the stochastic has gotten to level 90, or between level 80 and level 90. That's a good place to take profit and probably hold the trade, because once the RSI goes from down to up, it tells you that there's a change of trend from downward to upward, from bullish trend to bearish trend. So you place your trade here, this crossover here, and then take your profit at the next crossover that is above, that's close to the overbought area of the stochastic, which is at the level 80, 90. You understand? Then we wait for it again. When the stochastic comes down again and form a crossover, and then the RSI is still above, it's still above the level 50. You take another buy. You see, it gives you profit. Another crossover here, you place a buy, it gives you profit. Another crossover here, you place a buy, it still gives you profit. You see, you get a crossover here, you place a buy, you take your profit. And also note that the place where the candle that you enter the trade, you put your stop loss below a previous candle. Any candle that you enter a trade, your stop loss should be below the previous candle, below the wick of the previous candle. Like, for instance, I entered a trade here in this crossover, and then I entered a trade in this crossover here. You can see it's a crossover here. I entered a trade here. My stop loss should be at this point below the previous candle. You understand? Below the previous candle, that's where my stop loss should be. um you check this the same thing. If I enter a trade here, if I took a trade here in this crossover here, I place a trade here, my stop loss should be below the previous, below the wick of the previous candle. That's where my stop loss should be. And then let's say here the same thing. If I place a trade, if I enter a trade here, my stop loss should be below this previous candle. You get? So and so on and so forth. That's how it should be continuously. Why? In the sense that, let's see, where there was a crossover. Okay, there was a crossover here. When the RSI is still up, you place your trade here. Once you place your trade, you take a place your trade here. Your stop loss should be below the previous candle here and here, and then if you could always take out some profit, or if you want to hold, you hold your trade. If it does not go as you expect for the stochastic to hit your overbought level, then it will come down, and then it will close you on a minimum negative. But always, please, when you enter a trade, when the next candle closes in profit, always remember to take your stop loss, which is below the previous candle, bring it to break even. Take your stop loss from the below the previous candle, below the price where you enter your entry position. Take it above your entry position, or at the exact your entry position, which is the break even, and then allow the market to run. If the market reverses, it will still stop you out in profit, not in a negative. All right. So so here there was a crossover. There was a crossover here. There was a crossover here. You enter your trade, you took a profit, and then here there was a crossover here. If you actually enter a trade, give you profit 2 candles, 3 candles, you can always take you can always enter more than one enter at least 2 positions, 2 or 3 positions. Whenever your market is in profit, the first candle close in profit, you take out one profit. You close one position, you take one profit, close one position, and allow the other position to run, and the other position that is running, you will take your stop loss, move it from from below the price level, from below your entry point. That's if you're in a buy trade, from below your entry point, and take it to a little bit, either 1 or 2 pips, or 2 or 3 pips, or 5 pips above your entry position, or put it at break even at your entry position, and then hold the market to go further or not. If it reverses, it breaks you out, it stops you out in profit when you have already closed the first one position in profit. That is very, very important. Don't ever forget it. Yeah, you need to be smarter when you're trading forex, trading the market. You need to be smarter than the market. Don't stay and wait. Don't be a dollar. Be smarter than the market. Think faster than the market. So here again we'll have a crossover. Here. And then when you enter the trade there, you still make a profit here before the market comes down. When you enter here, you put your stop loss below the entry point here. After then, when your market is in profit, you bring your stop loss from below entry position to above or break even or above the entry position. You understand? You place your stop loss, and then when it now the RSI now crosses, is now below the level 50. It's below the level below level 50. There's a crossover here. There's a crossover here. You enter your trade. There's a crossover. There's a crossover here. There's a crossover here, and you enter your trade here in this candle, this first spread candle. You place your stop loss in the previous the week of the previous candle, and then hold your trade. And then when your market, this one, this it is, yeah, obviously it did not close in profit because it's a sell position that you're entering. And then you place your stop loss there, and then you see if the market reverses, it won't go far. It will take out a little bit of losses because your stop loss must be at the previous candle. Don't ever forget to put your stop loss at your stop loss should always be at the previous candle. Now if you are check here, and now see the RSI now comes up, and then you're looking for a buy, and then when there is a crossover below, the RSI is below, so you don't take any trade. Wait for the RSI and the crossover should be at the same place. If the crossover is if the RSI is above, which means you're looking for a buy setup, the crossover should be below the RSI. The crossover should be below the RSI for you to place a trade. The crossover should be below, yeah, the stochastic crossover should be below the RSI, for you to take a trade, because you're looking for a buy setup. If the crossover is below the 50 level, the level 50, so I mean you're looking for a sell setup, then the stochastic crossover should be above the RSI level. In this case now, this case now, here the RSI is above level 50. That means we're looking for a buy, only looking for a buy setup. Now you see first we have a crossover here. It came up, crossover here, and then the market came up and then came down, which would have stopped you out in a very either 1 or 2 pip losses. That's if you placed your stop loss, as I said. The first crossover here, you see, let's say this is a crossover here. This way you enter your trade. You took your trade here. You enter a trade here. You enter a trade in this candle, and then you place your stop loss below the week of the previous candle, and then it give you one profit on the next candle closed in profit before it now came back down. You understand? So it would have stopped you out here, because this is where your stop loss would have been if you're a good student, a good follower. Then the next crossover is this one here, and then if you have entered this trade here, this way you would have placed your stop loss, and then the market goes and come down and then stops you out. Also, this is about, let's say, 3 pips thereabouts of negative. Then the next crossover here, this is where you place this is the candle where you enter your trade here, because of the crossover below here. All this one you're looking for a buy setup, because the RSI is above the level 50. So you take a buy here, and then you take a buy in this candle, and then your or your stop loss should be at this place below the previous candle. That's why your stop loss should be below the week of the previous candle, and this is your entry position. Your stop loss should be below the previous candle, and then this is your profit. All this is your profit. Is your profit, and this is where you take your profit when your stochastic has gotten to level between level 80-90, which means overbought. Then it comes down again. You have another crossover here. You understand? This is where you have another crossover. This is where this is your entry position. This is your entry candle now. You enter your trade here. You bring your stop loss below the previous candle and watch it, and then it gets up here, you take your profit. It gets up here, you take your profit. Note you're looking for only buy setup because the RSI is above the level 50. It's above the level 50. Alright. So and you there's another crossover here. Another crossover here. Um here. And then you take your I think this should be your entry. This should be your entry candle. And you place your stop loss below the previous candle. And then if the market comes against goes sideways, stops you out on a very minimum losses, which will not take your account. And then this is another crossover here. This another crossover here. Note the RSI is above level 50 here. So this is a crossover. This is an entry point for you. Yes. This is another entry point for you to make a profit. Note that with following this strategy here, you've made more profits than losses. Your profit is maximum, and then your losses are very minimum. Except you're forgetting to place your stop loss at the point I say you should place your stop loss. You understand? And then going forward, here the RSI is still above the level 50, so you're still looking for buy setups, stochastic crossovers that are below the RSI. Now say this one, this is a stochastic crossover here, which you enter your trade. Stochastic crossover here, you enter your trade, and then you close in profit. Stochastic crossover here, you enter your trade, close in profit. There was a crossover here, profit. Stochastic crossover here, you close in profit, and so on and so forth. Everywhere crossover profit, crossover profit, stochastic you can, and so on and so forth. You understand? You just have to be diligent with the strategy. Use it on a demo account for at least 2 weeks. Perfect it before going real live with it. Remember, when you're trading, enter at least 2 positions. When your market is in profit, is in profit, when it closes in profit in the next candle, take out one profit and allow one position, close one position in profit, allow one position to run. At every point in time that you place a trade, make sure that you place your stop loss below the wick of the previous candle, when your market close, when the next candle or the entry candle closes in profit, move your stop loss which is below move your stop loss which is move your stop loss which is below move your stop loss which is below the entry position. I'm talking about a buy, set, buy, and buy position. When you're in a buy position, take your move your stop loss, which is uh, um, below your entry point. Move it above, like 2 or 3 pips, 4, 5, 2 or 5 pips above your entry position, or move it to break even, to at the very place you enter, your very price position, you understand. So, and then hold the market, or better stay, close it all in profit and then wait for the next setup. These setups, it occurs in many times in across all the currency pairs. Even in volatilities, it appears as well. This setup, you can use it in volatility, you can use it also in currency. To You can use it in currency, you can also use it in volatility to make maximum profit, and maintain a minimum to zero losses, very minimum to zero losses. You can also look at it, master it and perfect it, and use it to make a lot of money by yourself in your own place. So that is that for that. And note, it's a free strategy. The strategy is not 100% or 99.9% accurate, but it is, let me say, it is 99, it is 99.5% accurate. Let us say it's 99% accurate. 99%, 90, between 98 and 99%, between 98 and 99% accurate, because everything, when you place a trade, these losses are very minimum, the profits are very maximum. The losses are very minimum, the profits are very maximum. The losses are minimum, the profits are maximum. The losses are minimum and the profits are maximum. You can try it out by yourself wherever you are. Try it by yourself and see how it goes. Try it on demo and be diligent with it. Don't forget to put your stop loss. Don't forget to take your profits. Don't go and say you want to start holding it for a long run. This is not a trend. It's not a trend strategy. It's a inter trading strategy. You take your profits, uh, uh, 3, 2, 3, 4 candles, you take your profit and wait for the next opening. 2, 3, 4 candles, you take your profit and wait for the next opening. You understand? That's how you win the market. That's how you win the market. Well, I'm going to stop here for now. I don't want the video to be too long. I don't want the video to be too long. So just um, uh, do your best to understand the strategy more and more and more. Study it more. If you think it is suitable for you to use, and then make your profits and enjoy yourself. If you're making a lot of profit out of it, please, you can as well as comment under the video for us to know, um, for us to celebrate with you. And then if there is any question, any challenges, you can as well ask a question beneath comments. Any questions, so that we can answer it for you. Understand? We can answer it together and give you a better clarification, and also tell your friends about the channel as well. You can also please like and subscribe. Like and subscribe. So thank you very much. Thank you, everyone. I really appreciate. It is still your man, ABBA Forex, Mr. August Semeka, Mr. August Semeka, ABBA Forex. Thank you so much. God bless. It is all about grace. The grace of God is our strength. Thank you, and God bless you all.